Hey guys, always remember the three legs of the stool with the stock market. You have the macro, the fundamental, and the technical, okay? The macro is obviously, the Fed, inflation, right? Interest rates, things like that. The fundamentals are obviously companies' earnings, their revenue, their earnings per share, net income, cash flow, all that. And then the technical is what the charts are showing, okay? Now the macro and the technical are short-term indicators, right? We know the macro affects where stocks go, and we've seen that in the last year, right? Because of inflation coming down. This is why, they've been predicting an interest rate cut. At one point, it was 6 to 7 cuts expected. Now we've toned that back, right? And come back to reality a little bit to have maybe a few this year, okay? But the macro has really driven stocks, okay? But remember, that's a short-term thing, okay? The fundamentals, remember, is what is going to drive that stock price higher in the long run, okay? It's easy to get distracted with the macro and the technicals, but over the long haul, that becomes noise when your company reports solid earnings after solid earnings and keeps raising guidance. So never forget that. Don't get distracted. Numbers don't lie, so focus on the earnings of your company each quarter. You really want to look at those, the conference call, right, the transcript, and hear about their earnings and what management is saying, and make sure that company's still on the right path. Because if they keep beating earnings, that's going to drive the stock price higher in the long run, regardless of what else is going on in the world.